So, hi everyone. I just want to welcome Abe and Tiffany. Abe, this is Tiffany. She is actually the national sales director with Pratt and Lefevre that we're going to be talking about. And we should be having a few other people hop on, but if not, that's great. I just want to make sure that we get this information and just honor those that have come and started. So tonight we're just going to talk about the best tools for tax savings, not only for business but for personal, and just a little bit about me. Lisa Myers, a business owner's advocate. I've been in business and in different types of businesses for over 25 years. I was in the beauty industry for probably about 26 years. And then about 5 years ago, I released my clients, closed my business because of medical reasons for my hands, arthritis and so forth in them. And I could just no longer work with my clients. But during that 25 years, I also had a school where I taught hundreds of nail technicians how to build their business and be successful in the nail industry. And then also have done consulting and so forth over the years. And one of the things that I've always really been passionate about is making sure that you build a strong foundation so that when you've got that strong foundation, just like a house, if you don't have a strong foundation and something happens, the house is going to come tumbling down. And so
Mhm.
that's one thing I love about this is making sure that your business is set up correctly and that you're maximizing your tax, maximizing your tax savings and minimizing your risk exposure. And anyway, so I'm just super excited to show this information and just let you know what's happening. So let's get started. So first of all, um, a little introduction with Pratt and Lefevre. They've been in business for over 13 years, and really their main objective is to create extraordinary support and value to small businesses and really to be there to make that business successful and to do everything that they can to again help to maximize the tax incentives and minimize the risk that small businesses happen to. And so I met the owner with Pratt and Lefevre, Ron, and uh, several years ago, and it was like, and he'd talk about his business. It's like, yeah, we need to sit down. And so we just sat down probably about 4 or 5 months ago. And when I learned their system, I was talking to my daughter a few days ago, and I said, once I learned this, I can't unlearn it. I can't, I can't go to somebody and say, yes, let's just get you set up with an LLC and you're going to be fine. You're going to
Mhm.
be protected because you're not taking all of the strategies, and you might set yourself up to have some problems down the road. And so um, those that really should be listening to this presentation are those that have a limited liability company, those that are taxed as an S corporation, those that are sole proprietors, those that are 1099 contractors, right? And then also if you have W-2s in your own business. And that this is a great presentation to really check out. And so tonight we're going to go through the difference between filing versus structuring your business, various structure options. What are the four critical viewpoints that you need to have in your company? And then also the strategy that goes along with it. So, filing versus structuring. First of all, with filing with the state, and Abe, as you're getting started with your company, when filing with the state and nowadays you can do it online, right? You can go
Mhm.
to
Yeah.
the corporation and it's a one-stop shop. However, that's a bad way to start.
Oh.
When you do that, the state recognizes that you have a business. They say, okay, great, fill out this information. They have you fill out a generic certificate of organization for your business. And then they make sure that you apply for an EIN, which is an employer identification number that's stating that you're in business. However, you may not have any protection because you haven't set it up and done what is necessary. Now, when structuring a business versus filing, you're going to do the same thing. The state's going to recognize that you have a business. You're going to fill out the certificate of organization. But now you're also going to make sure that you have an operating agreement. You're going to make sure that you are taking minutes for your business. You're going to have that same employer identification number. And then you're also going to start acting as a business, right? And that's where a lot of companies get into problems, because if they're not acting as a business, they can lose that protection of the corporate veil. And we'll
Mhm.
talk a little bit about that as well. So, what is the common thread? Why do we all want to go into business? Well, one of the common threads is we want to increase our cash flow, we want to increase our income, right? And through that, there's different structures. And so there's different available structures in that. But one of the things is that as an employee, right, Abe, you're an employee, so you understand that
Mhm.
first of all, what ends up happening is I remember when my son got his first paycheck, right? And he's looking at the money he made, and then he's looking at all the taxes that are taken out. And he's
Mhm.
like, what is this FICA? Why are they taking out this money? This is my money. I get to keep this money. He didn't understand. And so what ends up happening is that when you're an employee, taxes are taken out first.
Mhm.
When you have a business, you pay your expenses, and then from the profit, then you pay those taxes. Okay.
Yeah.
So
Yeah.
that's one of the main reasons why it's great to have a business, because you can maximize those tax deductions. So
Okay.
there's different structures. There's the C corporation. Now, the interesting thing about the C corporation is that um, I always thought that a C corporation was for the big companies, those large companies, right? S corporation was for small businesses. Well, actually, a C corporation, what that C stands for is classic. That it's the oldest corporation. It actually came from Britain. It came from, it came over when the Americas were started. And that's how everything was set up. Now, one thing about a C corporation is that you can fall into what's called double taxation. And what that means is that if the corporation has a profit, then the corporation is taxed. After that profit, it also falls to uh, the shareholders, and then they also get taxed on that profit as well. And so there's kind of that double taxation. We're going to talk a little bit more about that as well. S corporation actually has more regulations and limitations. And that one thing about an S corporation is that you yourself have to be an employee of that company. Well, the thing with that is, remember, the reason why we don't want to be employee is because we want to maximize our taxes. Well, now that S corporation is having you be an employee, so now you're paying employee taxes. If there's also a profit to that corporation, you're also going to be paying what they call flow through taxes. That is going to also show up, and you're going to be paying taxes on that as well. So we're going to show you how to minimize. And then there's the limited liability company. It's interesting. I always thought that was limited liability corporation. And it is what
Mhm.
it says. It's a limited liability. It gives you
Company.
a limited amount of liability. If you don't have it set up properly, and that it can also give you some exposure. Sole
Mm.
proprietor, or what we call as a DBA, or doing business as, has no protection at all. That's where it's filed on your um, tax return, right, on a Schedule C. If you're a single member limited liability company, that is basically the same thing as a sole proprietor, and there's really no protection with that. And then there's the general partnership, limited partnership, and family trust. Tonight, we're going to talk about these 5 here. Okay. So first of all, the 4 critical perspectives of a business. So when looking at building your foundation, if you will, you're going to want to make sure that you've got, that you're talking with CPA, an estate planner, an attorney, and how you're building that management. I like to think about it, though. The thing is that think about a house, right? And think about that you've got your CPA is in the front of the house, your attorney's in the back of the house, estate planners on one side, and the management team is on the other side. All of them are coming from a different perspective and a different experience. So if you start to have them explain to you, have that CPA explain to you where they're at, what it looks like, they're going to tell you something different than what the attorney tells you, correct?
Yeah.
And that's a lot of times.
Lisa, what is CPA?
Pardon?
CPA, what is that?
Certified Professional Accountant.
Okay, perfect.
Okay. And they're going to tell you something. They're all going to tell you, they may tell you something different from their own perspectives. What Pratt Lefevre has done is they've gotten all of them into the same room, talking to each other and creating this strategy. Okay. We are going to go through
Control Everything strategy is vital to entrepreneurs and small businesses who work with the public and want to increase their liability protection and available tax benefits. The first layer in this protective strategy is a corporation, which will have 1 shareholder, the trust, 3 board members, of which the client is chairman, and 3 officers, a CEO, president, and secretary. The trust I mentioned is going to be either revocable or irrevocable. Revocable is often referred to as living and is more flexible, where an irrevocable is less flexible but offers more protection in the case of a lawsuit. In conjunction with the trust, we advise a pour-over will, which allows ownership to transfer uninterrupted in the unfortunate case of a client's death. Pratt & Lefevre Corporation designed this strategy to ensure our client's business and legacy are structured to remain intact for future generations. This trust is the only shareholder of the corporation and is also one of the members of the LLC. The LLC is the suggested second layer in the Own Nothing, Control Everything strategy. Establishing a multi-member LLC is critical to ensuring that the entity is not considered disregarded or an alter ego by the IRS. Our recommendation is 3 members: the trust, the client, who will be the LLC's general manager or president, and their spouse or trusted partner, who will serve as secretary. This will make up the 2 to 3 officers of the LLC. We do adamantly suggest 3 officers for both the corporation and the LLC to reduce the risk of impasse when it comes time to vote. The LLC exists only to hold assets and rent them to the corporation. To say it another way, the corporation rents all of its assets from the LLC. An easy 3rd layer can be added for increased tax maneuverability and furthered arm's length protection in the form of a DBA or ABN. And at the core, of course, is the client or individual. So, to break it down, we recommend a corporation for your publicly visible protective layer, an LLC, which is invisible to the public and contracts only with the corporation, an easy 3rd layer that offers even more maneuverability and protection, and the trust, a layer for arm's length control, a tool to ease the transfer of ownership should the need arise, and an integral component in eliminating the pain of probate. You can learn more about this specific aspect as well as the other individual layers, our team, and a deeper look into the strategy by clicking the link we've provided below. This concludes the mapping for our typical organizational structuring recommendation. However, a personalized mapping with one of our knowledgeable account executives may have varying results of what is suggested based on your current condition, future goals, and what you need to achieve them. Structuring is highly important, and in the case of layering, your structures must work in harmony through strategic cash flow. Remember, if there are no asset transfers, there is no strategy. I want to emphasize that because the asset transfers are the key that unlocks the strategy we're talking about today. This is how it works. The client or individual has assets such as home and office furnishings, computers, electronics and related items, tools, equipment and related items, automobiles, and homes or properties. Our trained team of legal processors take all of these assets and transfer them from the individual to the LLC. This asset transfer may include management contracts between the client and LLC, marketing and management contracts between the LLC and corporation, auto and equipment rental agreements between the corporation and LLC, bills of sale for all assets, property rental agreements, HUD settlement statements, installment land contracts, wraparound contracts to carry loan obligations, and the funding of the corporation, LLC, and trust. Once the asset transfer is complete, the cash flows from the public to the corporation, which pays and deducts as business expenses any acquired overhead, including contracted fees to the LLC, as well as the client's once personal expenses like rent or mortgage payments, utilities, vehicle maintenance or repair, gasoline, auto purchase interest, and even credit card interest. Using these contracts, we guide the cash flow from the corporation to the LLC, which eliminates dividends and with them the concern of double taxation. The LLC then pays and deducts property tax, auto tax and registration, and any overhead accrued by servicing the corporation. Even more can be deducted in the form of asset depreciation. Once the LLC has paid its expenses, the cash flows either to the easy third layer for management service provided to the LLC and then to the individual or client who owns the DBA, or it can flow directly from the LLC to the individual. Thank you for taking the time to watch this video today.
So I'm not
My
sure.
name is Toni Dancing, and I'm here to share my story with you.
Can you hear that
After
at all?
being a sole proprietor for 8 to 10 years, I paid over $10,000 in taxes every year. I then changed to an S Corp at the request of my CPA, and for the first time ever, I received a $1,000 tax refund. I was so happy. But after meeting Pratt & Lefevre, I restructured my business, and for the first time ever, I received a $20,000 tax refund through the structuring of my business with the help of Pratt & Lefevre. I implore you to do the same.
So basically, a lot of times it's like, okay, this is really overwhelming. And one of the things is that Pratt & Lefevre has created an A team, if you will. And to do all of this, like we said, they got everybody in the same room to talk with each other. So they work with over 3 CPAs. They work with attorneys, whether they're corporate attorneys, state planners. They work with a large team of bookkeepers and legal processors. They've got a gentleman that was a tax accountant with IRS experience that he used to do auditing and so forth for the IRS. And we have also estate planners. So, one of the things that I love about it is that it's all together. So you're not the one that has to do everything. They have the team that works for you. And one of the things I love is that, again, like I said, I've seen this process, and I can't, when you were talking about that you were trying to learn about, getting an LLC or what you needed to do. And I was kind of being vague because I honestly can't say, okay, all you need to do is go out and get an LLC and you'll be fine. That's all you need to do, because now myself, even, I'm changing my whole business structure because
Mhm.
I didn't set it up properly either. And now
No.
working with clients, I'm showing them the same thing to make that decision so that they can make that decision what works best for them, but to know what is available. So the next steps really is, if you want a copy of the recording, to go through it again, kind of get a little bit more of that understanding. If you have questions, need clarity, I'm here to answer. Tiffany is also available. And if you would like for us to set up a strategy with you, we're also available to do that. And I'm going to go ahead and stop.